Welcome to the Scotch Money, the Scotch Money Show, with your friends Dimitri and Brian and Hunter, talking about the things you gotta know. And I bet you wanted to hear about tech investing, oh yeah. So we're gonna tell you about it on the Scotch Money Show. Welcome to the Scotch Money Show. Let me pour myself some scotch. Hold on. Oh, snap. I did it. All right. Before we get to the Scotch of the day, cheers, guys. Scotch Money. Oh, it's so good. So good. Welcome to the Scotch Money Show, where we talk about Scotch and money and Scotch and money and investing in Scotch. Wait, and money? Cheers, guys.
Cheers.
Cheers, guys.
It's good to be back from the Asian subcontinent. And we'll talk a little bit about it. But first, I want to hear about Brian's Scotch of the day. Scotch it.
The Scotch of the day is still an heartbreak. So
Scotch of the until that bottle's gone.
It's coming around. Okay.
Aren't we so well coordinated, guys?
Realize it's an HOA from Hardback, right?
You're like, we're gonna keep drinking this scotch until they sponsor us. Damn it!
It's not bad.
Okay, so in any case, thanks to all of our many sponsors. Where are you guys? We're supposed to get the check, right?
Neighbor's dog for joining us.
We need to be sponsored so we can get more Scotch money, so I can get more Scotches of the day.
Yes, we need sponsors, such as, what was that one again? Maybe I'll remember it if they send a check. It's good to be back, guys. I loved what you did on that last one with the head. Do you still have that head?
Oh, yeah.
All right.
It's like the South Park version of you.
Yeah, I was Canadian for
Canadian version of the music.
While I was in Asia, I was Canadian. It's funny.
Do you hear the dog in the background?
I hear the dog in the background.
Sorry about that. Okay.
It's okay. It sounds like he has a rough life.
Yeah.
You see what I did there? Okay. And I feel like we're finally getting the sound better. I can actually hear myself, and it's awesome.
Yeah, that's great.
Because Hunter told me to turn up the gains. Okay, let's get down to business. How have things been with you guys while I've been away? You guys did the thing on Hunter. Now we're going to be talking about tech investing, which we all know a thing or two about because we've done a little bit of tech investing. I know that both of you have your individual views on tech investing from your own individual perspectives. Let's start with Hunter. Hunter, tell us a little bit about your experience in tech investing and what you care about and all of the other stuff.
Well, to just be open and honest, I've had good experiences and I've had bad experiences.
Yeah.
There's a lot of hype around tech investing and it seems like it's all awesome, from the outside looking in. You see things like 10x returns, 20x, 100x. You're like, what? This is impossible. Multiplying money by that, it's like in that short of time, nonetheless. You see these turnarounds sometimes 3 years, 5, So everybody's like, this is amazing. And then when they look at it a little closer, they see it's all about innovation and invention. It's the forefront of humanity, basically. All of our ideas and concepts and structuring them into physical things, implementing them in our physical world. And that's exciting. Like we're creators. We're naturally born to create. We were created to create. We are what we have always been at heart. That's why I think it's so alluring. I think maybe the word. I think a lot of people that are getting into investment and looking at types of investment see tech as very alluring, like, oh man, that's exciting, oh, that's new stuff. There's a lot of big money and flashy things and
big money.
crazy sounds and cool videos and hardware and gadgets, and so I think it has a very alluring quality, but that could be, you can be you can be completely wiped out in it, though, is the downside. A lot of people don't consider that. They see the upside potential, but
Well,
the
I
downside
feel like so.
is
I feel like the times that people get completely wiped out are the times where people invest with people that they shouldn't have even invested with because the person like runs away, right?
absolutely
Um,
sucks. Scott.
anytime that I've seen a company even fail, if it was a good company, like if it had good leadership and people weren't pretty much stealing money, you can piece it apart and get something. You know what I mean? Like there's always some kind of value, unless it's just a bullshit company, right?
It also depends on the timelines for receiving that value, because when looking at tech, a lot of the tech entrepreneurs, they get excited by the technology and they focus on the technology and on the product versus on the people they're actually seeking to serve, the tool. And sometimes people get too caught up in the in liking this new toy or the romance of this new tech. But the truth is, it's not worth anything unless it solves somebody's needs, a large number of people's needs. That's why social is so important. That's why a lot of social technologies are getting really important right now, because everybody has a social need. We are social creatures. So if it hits a nice sweet spot, then it could make really nice multiples. But they can't just build a product and expect people to come. They have to actually find an existing problem and an existing market. And
Wait, what about that? What about that technology that Lovin? No, don't say his actual name. The Lovin guy. What about that one? Can he build the technology and expect people to come? It's a sex robot technology, Hunter.
I'm missing this one somehow. Are we talking about the McLovin guy?
No, there's a guy who I'm not going to say his actual name out of fear of possible lawsuits, but there's a guy who his name sounds like Lovin, and he's, I guess, from what I hear, in the sex robot industry, which is a technology I think we should talk about.
It is.
He's a very savvy tech investor and tech CEO. So he explored the technology and saw that it didn't have a strong enough market.
Yeah.
He's a finance guy, so it didn't make sense financially. And that's the right move.
Yeah.
Like,
well, there's also so many different ways to invest in tech, right? And when we say investing in tech, there's we're talking about venture capital investing, right? And there's venture capital, there's private equity. You can either take over the company, private equity, or you can invest in it earlier stage, right? So there's like food tech, like CPG, consumer product goods. There's software tech. There's consumer technology. There's hardware tech. Like, can somebody make some sense out of all of this stuff for anyone who's actually listening at this point?
Yeah, tech investing basically boils down to, from a macro perspective, sector and stage. Those are the two main things you're going to try to zero in on, is what your target investment, is, where your sweet spot is, where you like to play, so to speak. I just actually heard of a company, Spain Capital, which is not normally too much tech involvement, but they're raising like $1 billion tech fund right now. A lot of people going really big into tech, just because of, I think, a lot of the internet 2.0, the cloud storage. Everybody sees the value of all their information being somewhere digital. And now with blockchain coming online and all the types of, tangles and
How online is blockchain?
it's completely online.
Who's actually using it? Do we know anyone who's actually using it? Like, not saying, but they're actually.
Absolutely. I mean, companies like Walmart already have their own proprietary chain. A lot of logistics chains are being built by large companies that people would recognize the name of, but it's on the back end side of things. They're using it for their own internal management of things. It's a great custody chain device. They can track things from one handler to another and get verified, compliance to different things that's automatable now through a software. So logistically, blockchain makes a lot of sense. The currency side is still yet to really go, mainstream, but
isn't Bitcoin up now again?
Bitcoin is up. Bitcoin is up from what a lot of people are calling the bottom. They say that the low has finally been hit, and it should be up for the most part from here. It's still going to be volatile. Like, it's still going to have hugely wide swings. Like, people today holding Bitcoin can expect, I feel like, to be up, 10x in 10 years. But in the meantime, they're going to be down 90%.
I disagree with that. I disagree with
that. I mean,
I will say this about Bitcoin. And you and I have talked about Bitcoin since, like, what, 2013 or something?
Yeah.
Where you said at that time it was like $3 a coin, and you're like, "Hey, Dimitri, let's take some money and throw it into Bitcoin." And I'm like, "No, that's stupid."
Yeah, I was going to take 10 G's and start a mining operation in 2012, which
I remember.
We'd all be multimillionaires by now.
Well,
oh well. If we'd have had the nerve to sell at the 20K height, a lot of people, when it started to the moon, they rode it all the way up. And they were so used to the volatility that when it started making a major retraction, they were like, "Oh, that's just what it does. It's gonna keep mooning." And then it kept going down, and they're like, "Well, now I'm down far enough. I don't want to take the loss, and surely over time it'll come back up." So now all of those people have graduated to becoming what they call hodlers, in the industry, because holding isn't a thing; it's hodl.
Oh,
like a mistype. So everybody that holds their Bitcoin is a hodler, but
I feel like we've diverged from
the industry itself. In the tech sector is a toddler, so it makes sense that the toddler has hodlers. Like, we're at extreme early inventor, adaptive, adoption curve early. We haven't even, I don't think we've even gotten into minority adoption yet. It's still hitting that stride. Like, until the regulations are decided on that, that's a tech sector that is just risky as can be right now.
But here's the thing, like, the reason back then I said, personally, I think this whole Bitcoin thing is bullshit. I still think it's BS. And here's why. There's no actual look, and I'm not going to get into an argument about the value of the coin and, oh, the government's coming after us. Look,
I just like to say, by the way, a whole episode just on crypto.
I know. Look, I dislike the government and their control of money just as much as everyone else. However, money is money, and we all agree on that money, and we agree how that money can be used. Now, should everybody agree on Bitcoin and stuff, whatever, we'll use Bitcoin. But I don't know. I don't see any inherent benefit to using Bitcoin over using the US dollar or using the Chinese yuan, whatever, shay. The point of the matter is, I don't see any inherent benefit to using one over the other. And I've heard the arguments, and I think they're all BS. As of today, the blockchain technology, different story. But the Bitcoin and the Ethereum Light and the Ethereum Dark Brew, like whatever, I don't see any inherent value in it.
It's crazy. Actually, in China, you can actually mine it That's legal, but you can't.
I don't think so.
That's
I don't,
illegal.
I don't think you can mine it.
You can mine it. You just can't sell it.
Dude,
But you
China's
can
a
trade
messed
it.
up place.
That's a gray area. It's like mine it, yes. Sell it, no. Trade it, maybe. Like
No. They're very strict about Bitcoin at this point and any cryptocurrency because it's a way that people are using. They're using that.
Stop the trade. That's why it's a gray area. They can't stop the trade.
They can't stop the trade, but they can stop the production of it.
Oh, the mining is wide open though.
Is it? I'm not sure. I guess I'm.
Oh man, mining is wide open. They have some of the biggest mining operations in the world over there. That's the thing. The power of that beast in China has yet to be unleashed. It's only showing weight in the markets.
Okay.
It's not in the country yet. But that's the thing. Once we regulate it and it goes crazy in our country, I feel like it's got to go crazy in China because China's never been technologically behind us, as far as like consumer spending ability. Like they have the ability, to pay for their drink in a vending machine with a phone for a decade. Like, these guys, they know how to pay. They know how to pay easy. Like they like fintech. But
They do. And then they have dude, everything is so efficient in China. It's crazy. I'm going to steer this conversation back to where it needs to go because I don't want to be talking about no blockchain or no, blockchain is fine in its applicability, but I think people want to know about, okay, well, I can't invest in Walmart. And if I do, I'm just stock investing and gambling. So I think people want to understand our experience in investing in the earlier stage stuff. The reason I brought up the whole coin thing is because back then and still today, I'm a firm believer in technologies that can be used to, it's not like, look, I love Scotch. I wouldn't invest in a Scotch company, but I would endorse a Scotch company if they endorsed us. That's America. That's an America thing. And if you don't like it, you're a dirty communist.
oh my God. Here come the lawsuits.
Thank you to all of our dirty communist sponsors that don't exist currently. The point is, allegedly don't exist. The point is, you guys know, I like business to the public sector technologies, education, defense, technologies that will flow downstream to the consumer, like the internet, for example. We're sitting here on the internet. The internet was created by DARPA. DARPA was and is a government sector agency that serves as an incubator for technologies that go first into the public sector and then down to the consumer sector. There's a lot of value in that because relationships, the buying decision when you're talking about Scotch, or when you're talking about food, or when you're talking about a piano, or whatever it is, the buying decision is made by masses. You can somewhat control that, but you can't really control it. And so then you could fall into a series of bad decisions to have a poorly structured company. But when the buying decision is made by just a couple of folks in the public sector, the bureaucrats, all you need to know when you're running a company, of course, you have to have a good technology and a good company, but good ideas are a dime a dozen. Sales is what it's all about, sales and marketing. But you only need to sell and market to a handful of folks that have the buying decision. So it's simpler. It's a simpler process, in my opinion. Right?
What overall is a simpler process?
It's easier to sell to a smaller number of people that have a very well-defined buying decision. Right?
Absolutely.
So
it's also the scariest thing to sell to everybody. One of the things that I look for when listening to somebody creating a new technology is what's their market? Who are they selling to? And if they say everybody, have to dive deep, or just walk away, because it's very scary. They haven't defined who their market is, who they're seeking to serve, because without that definition, they can't tailor the product specifically. And there's then their decision is, well, why use the product, right? If it's tailored to everybody, it doesn't speak to them. They won't have that extra emotional need to actually use this product because it doesn't connect with them. And if it doesn't connect with them, then there is one other thing that they could do. They could just not use it. They could just not try to adopt it. It's easier to do nothing.
Yeah.
If they're already using an existing product, it's easier to not switch.
Exactly. And people are scared of change. Like we live in a day and age where change is embraced in our society, but we all know better, and if we should know better and understand that to change something is much more difficult than to keep things the same. And the average person, although society and media tell us that we should embrace change, and we should, that is the ideal. We should embrace change and always strive for the better. But the average person in their daily lives does not embrace change. They embrace staying the same. And the only things that'll help them change is a social pressure, generally. The social pressure of, oh, well, I'm not on Facebook. Back in the day when Facebook, I'm still not really on Facebook. But, back in the day when Facebook first came out, I didn't want to go on Facebook, but until, I had a girlfriend at the time that was like, hey, I'm switching from MySpace to Facebook. And I'm like, I love this Facebook thing. The point of the matter is social pressures can facilitate things like change. But if you're right, Ryan, if you're trying to market to everybody and you're saying this is just going to help everybody with everything, 9 times out of 10, it's going to be just BS. It's not going to work. And eventually it will whittle down into a more specific product for a specific group of people, young people, old people, whatever. But you'll waste a bunch of money figuring that out.
Yeah. And you're letting the market decide. You're letting other people decide where you're going to go. You're essentially saying, I don't know who this is for. I'm going to throw this out and you guys figure it out. Which, from an investor perspective, you essentially can't trust the CEO because the CEO is not in control.
Yeah, no, you need to have a strong CEO. It's silly. We live in a day and age where people are really, knocking down the CEOs and the crazy guys like Zuckerberg and all of the other fun-loving guys, Bezos. And look, to each person's own faults, right? But a strong CEO from an investing perspective, I want a strong CEO. And I want a CEO that has vision. I want that CEO to say, look, here's what we're doing and here's what we're figuring out. Now, if it doesn't work in this way, of course, we're going to pivot. Of course, we're going to adapt because sometimes you have to. But a strong vision and a strong momentum will take you really far. So you always, they say you always bet on the jockey, not really the horse. Well, it's a good saying. I'm just saying.
Definitely the case in the tech investing world. Absolute truth.
There was a guy we were talking to yesterday. This isn't really tech investing, but it's company investing. And he's Hunter, you were there. He has this marijuana operation in Rhode Island. Not saying any names, not endorsing anyone unless he pays. Just kidding. Okay. No, but great guy. So he has this marijuana operation. He didn't really know what he was doing. He had money from a different successful venture. You bounced it from venture to venture. And we were talking to him because, well, of course, we have real estate on the East Coast for that particular use. And we're talking about partnerships and whatever. And he was telling us about how he put in 1.3 million into this 5,000 square foot operation that he has in Rhode Island. And that's a pretty small operation. I mean, considering we have what, 55,000 square feet and then 120 coming up, like, you know, it's small. But he was saying, and this is actually very applicable to what we're talking about. He was saying how, look, he wasted so much money just figuring it out. You remember that, Hunter? Yeah. He was saying, but I think it was like 400,000 out of that 1.3 million. 400,000 was like a complete waste in his mind, just because he didn't know what he was doing.
Yeah, he said
We talked
about another venture. Actually, he had a really successful venture before that one. That was a
careful.
Yeah, it was a great venture, and he was in a sweet spot to make an angel investment with a friend that was onto something big, but the need was anticipated to be about 350,000. He's like, "Oh, sure, I got that. That's no problem. This is great. We're in the catbird seat. Let's do this thing. We don't need anybody else. Let's go for it." Well, it ended up taking like over $1 million or something. Like he had to come up way more money to get it across the finish line. Mm-hmm. But that happens a lot of times, and it happens just naturally because any new thing you're bringing to the market, you're doing something that's never been done before. Like there's almost always unforeseeables. Like nothing ever goes completely to plan in the tech world. Like, that's why I like teams that are flexible and nimble. A lot of people say, look for proven performance. Oh, you want a jockey that wins, right? It's like, yeah, okay, but some jockeys get a big head, and then they don't show up for practice, and then they think they can win just with an hour's effort a week. Or, the same applies to startup CEOs. Some of these guys build something, successfully exit, and then they think everything they say and think it's right. And then they bomb the next one. I mean, just bomb it, just out of ego, and it's sometimes subconscious. They don't even realize that they've gotten there. They're like, "Oh, I know what it makes to succeed, so listen to me." Boom, boom, boom. But it really takes
ego would stop them from being coachable, and it's not even just being coached by the investors, because investors get it wrong too. It's being coached by their markets, their people, the people they're serving, because. Yeah. If they're not listening and they're not paying attention, they won't pivot when they should pivot. They're not going to change when they should change and not change when they should not change.
So
there's also
very important.
Yeah, like it's important that if they see something happening, they don't just react. They would take a look at their priorities, their goals, their dreams for the product, and the customer's dreams for the product, the user's dreams for the product, and figure out what will work.
Yeah. There's an interesting thing that we haven't really talked about, but it's actually extremely important when you're talking about this kind of stuff. So a friend of mine, and I'm not, again, I can't name names because this one would definitely turn into a lawsuit. But in any case, a friend of mine recently sold a very large company here in Orange County to a very, very, very large company. It was a multi-billion-dollar transaction. That's all you'll get. That's all you'll get out of me. The point of the matter is him and I were having scotches. He's a Scotch fan. Maybe we have him on. I won't say who it is, but whatever. Maybe we'll have him on, but with like a bag over his head, like a Mr. X type of guy. And he'll be like, we'll deepen his voice. He'll be like, "Hi, I'm Mr. X." In any case, so a friend of mine, he sold this big company, and he's one of the two partners that started it. Great transaction. He's a great guy. We were having scotches, and he was telling me, look, he used to be at another big company. I just realized this is going to be. He was at company X. He created company Y and sold it to company Z. The point is, the reason he was able to create this company that he sold was because he had the track record of success at the other company. And so he pretty much did it again. He started another company. He was a great jockey. It's kind of a crap, like it's a crappy company. I'll be honest. But he was well capitalized. He was able to further seed round, raised like 15 million, some stupid number. He didn't have to be scrappy because he was a good, he knew the market well enough to know that he has something that's good enough to take it to an exit. And so he did. And he has a beautiful house in Nelligale. And
funny, that's a trend going on in the tech sector now. You get people with some experience and they identify something as marketable. Like you said, it's about sales and marketing. They see something sexy enough that's marketable, and they know enough buzzwords and big words to combine it to get enough money funded in to just get them to exit, and the company even serves no purpose. It eventually just dwindles to nothing, but their whole function is just to sell an idea enough to get money behind it, to make it look cool enough to sell it for something else.
I'm giving him a little bit of crap. There is value in what he's doing, but the thing is, look, good ideas are a dime a dozen. Everybody has a good idea. And a lot of times people who don't know what they're doing when it comes to tech investing, or people who don't know what they're doing when it comes to starting tech companies, don't realize that, look to your left, look to your right. Everybody's got good ideas as long as they're not completely, mentally out of there. Execution is what it's all about. And you can't execute without solid capital. So a lot of the times you see a lot of really great ideas die because they don't have enough capital. And so then they start making bad decisions because they start getting desperate. And, you see money just disappear, right?
The other issue is also they can get capital because they do a friends and family round, or they meet an unsophisticated investor who's very excited about their idea, and would want to help them take their idea, build a prototype, and then go to the market. But there's a big issue there. You're building your idea for the market, so you shouldn't build the idea, create a product, spend all of that capital, and then show it to the market for the very first time. You should begin with actually speaking to the market, creating interview questions and speaking to actual people and getting people.
That's a tough one, though. I don't know if I agree with that, because there are many roads lead to Rome, right?
So roads lead to Rome, but you can do that. I mean, from a consumer product perspective, you could, that's one route to take. Another route is, of course, using analogs. Who is your competition, and using the competition as the benchmark.
Exactly.
There's lots of ways, but if you don't have market research and you don't have competition.
Okay. I agree.
It's, if you build the product first blind, is all I'm saying.
Yeah.
Really
you're 100%. I was misinterpreting what you were saying.
I am saying.
You son of a bitch.
Definitely understand the tech in the tech sector you're looking to invest.
Of course. Yeah, you can't.
Got to understand the tech first. Don't just think it's cool. Don't just like it. Understand the tech. Go to some conferences, get a book, read some articles, watch some YouTubes, kind of, immerse yourself in the tech before you pull any triggers, because then you'll know what an actual good idea actually is. Because a lot of tech ideas I've had in the past, I'm like, oh man, that's an amazing idea, and the person I'm talking to is like, that is amazing, and then I talk to a few friends, they're like, that's amazing, but Google it. Oh, look, there's a guy in India did that 2 years ago.
Right, I remember that one.
There's another, you find out there's multiple people that have had this idea. It's actually not the newest idea. And as you get into the sector and looking into that area or about that thing, he created this. Oh, he's created other of those. Oh, he's part of an organization that works with people that create those. And they have all these companies. There's a whole world around this. You just didn't know about it.
Well, remember the iPod, right?
Yep.
Remember the iPod? The iPod wasn't the first MP3 player. There was a Zune before that.
Yeah.
It's all about execution.
Yeah, it is not about the technology itself, because the technology can excite people. The technology will look like good technology, but does it connect with people? You know, will who are they trying to serve, and is that technology actually going to serve who they're trying to serve? And it helps if, one, they provide their competition list, two, they provide their market research, because we can't expect as investors to be part of their target markets. We can't expect to know who they're investing to. They're not out there to serve us.
No. And what the heck do we know?
Yeah, exactly.
It's not about the things that you like necessarily. Like, I may like something, but I'm a weirdo, compared to maybe the majority of the market of a specific segment. So investing is not, when you're investing, you shouldn't be emotionally attached to it. The buyers get emotionally attached to the buy, which is what it's all about. So proper marketing is good there, but you shouldn't be emotionally attached to something and be like, well, if I like it, then everyone else is going to like it, because that's not always true. And
based on both of what you both just said, kind of leads me back to the scenario that I was just talking about. So let me clarify a little bit. If you do that research after you see what you think is a good idea and you see that it's been done, that's not necessarily a do not do this, because of exactly what Brian was saying. It's like, it's not just about the idea, it's about how you approach people with it, how you learn your community, how you present to that community, and if that community accepts you or not.
Yeah.
The example I was given about the one where I found somebody that did in India a couple of years prior, and this, that, and the other, he was actually, I feel, too early is the reason he wasn't successful. I still feel like the idea is great. He was a little too early, and he had zero marketing. Like, he didn't tell anybody but his friends. Like,
timing happens.
Yeah.
That idea could.
There's I read this book. Oh.
And the same thing goes for what Mr. Dimitri was saying, is just, if you're excited about it, like, oh, if I'm excited about it, other people are excited about it. That's not necessarily a reason to go for it. So just because it's been done may still be a yes, and just because you like it may actually be a no. So it's kind of counterintuitive.
Yeah.
For what you would think,
I apologize, guys, for all of the background noise.
No, everything's good. Tell us about this book.
Oh, yeah. So Originals by Adam Grant called it the first mover disadvantage. Because when you're out there pioneering something, the market isn't ready for it. The market
may or may not be.
You're paving the road for your competition if you're the first person to go in.
Yeah. Well, look at Friendster and MySpace and paving the road for Facebook, right? It's the difference between the bleeding edge and the cutting edge. You want to be on the cutting edge. You don't want to be on the bleeding edge, right?
Yeah, that's funny. In music, that's what I found to be like the sweet spot in creating music, was you want to push the boundaries. You want to push the envelope. You don't want to rip it. You don't want to be outside the box. You can push the box, but you
don't want
to go outside of it. You can't just rip it. Like, there's a certain amount of.
You don't want to be like Captain Beefheart. You guys know Captain Beefheart?
I do not. His name sounds hilarious.
You guys got to listen to Milk. But I think Mark Maron said you have a lot of catching up to do if you haven't heard Captain Beefheart and his magical. Is it his magical band? Oh yeah. Listen to Captain Beefheart. Not right now, but after this, you guys got to do it. I'll endorse the beef.
Let's remember to put a link in the show notes.
Captain Beefheart. Yeah, he's got to start making much. I think he became an artist because he wasn't successful in music. I think it's awesome. In any case, one thing that has really been kind of pissing me off in the tech sector recently is what the hell is happening with institutional capital? Like, look, when Amazon went IPO, they raised like $1 billion, maybe $1.5 billion. And that was like what, late 90s, 99? Or was that already 2001? What, can somebody Google when did Amazon IPO, the exact year? I want to say it was 99. And in the meantime, I'll make my point.
97.
97. Okay, yeah. So late 90s, like $1 billion, 1.5. Uber just went IPO and they raised like $10 billion. Amazon actually had infrastructure. Uber has nothing. What the hell do they need $10 billion for? It's just there's so much speculation in the market. Everyone's like, oh, what I want to invest in this thing, but it's like, dude.
Well, I think going back to cryptocurrency, the whole Bitcoin craze got people warmed up to the idea of investing in something that's not based on anything.
Mm-hmm.
And if it's a short-term gain, maybe it's something that's worth it. But I personally don't see it's. I'm personally afraid of that sector. I'm personally afraid of something that doesn't have long-term benefits. So if I was a short-term investor, maybe Uber would look like a great investment. So would Bitcoin. Anything that makes a lot of money in the short term, and then I could cash out before it dies.
Before everything
crashes.
Zippity doo dah.
Yeah. And that's the thing. As a trader, if you want to get an investment to where you're an active trader and you're trading actively, then up or down doesn't even matter. It's just volatility. You just want movement. You can make money off it either way as long as there's movement. So
just make sure you're winning on the spread.
Exactly.
So it's if you're playing that game, then you're investing one to play that game because it's very exciting, and you lose a lot of money because of your own fault, because you either didn't jump at the right time or you got on at the wrong time, or
it's musical chairs. It's like financial musical chairs. The thing about musical chairs is at some point someone ends up without a chair.
And you know what's funny about
you just want to make sure that that's not you. I mean, there's some people who like playing that game, and a lot of investors who now seem to like playing that game.
I don't consider that investing. I consider that gambling, and I think it's bullshit.
But from what we're talking about a lot specific, I mean, a lot of the things that we invest in are long-term investments. We usually think a few years ahead, and see, is this going to go kaput in a few years? Does this actually have a social need? Is this actually connected to people? Is this actually connected to something physical or valuable, actually valuable?
Tangible.
Tangible.
I'm like, there's words for these things.
Scotch.
So Scotch tangible.
It's an early Scotch money recording, 10:30 a.m. I mean, and I'm drinking actual Scotch right now.
Actual Scotch. We're all drinking actual Scotch.
No, now.
You know, it's funny. I think that's
I don't know what shit you're talking about, but this is a 47%. 46.
That's why you have
That's why you have ice.
Yeah. My ice melted, but I keep drinking. I've had like 2 glasses of this. But I feel fine.
I think the reason that Uber, IPO went the way it did is a combination of what we were just talking about earlier. You have that whole, I like it, it's useful to me, I see it everywhere mentality, combined with, I've heard there's a lot of money to be made in IPOs. So you combine the two things, Uber, IPO, whoa, like all it, just the mania. I think that's what it calls it.
I mean,
is that how the investors look when they're investing in IPOs?
Yes, 2 buzzwords. And when 2 buzzwords converge, I mean, it's just hype mania.
You never cross streams.
Same way with Lyft. Look at Lyft. Lyft was losing money notoriously. And IPO, people were like, yes, give me some Lyft.
Give me some of that Lyft.
They got some Lyft. They're like, wait a minute, what is this?
I didn't want Lyft. I don't want Lyft. Give it.
But it's like that they were, victims of the hype. It's like.
I think you just got to look at it in terms of, whether you're people in general or other investors are optimistic in the market or pessimistic in the market.
That's why I like sentiment. And I'm really digging a lot of this AI that people are trying to come up with that are determining sentiment through content of the internet, searching on social sites,
Yeah.
Yeah.
But the thing is, you have to take a look at that sentiment, and then you make a decision on whether to go with it or against it.
Exactly.
And if there's too much optimism, that means that the bubble's about to burst, because like there's only so many people, and there's only so much value. And if people are so optimistic about it, they're overloading it too much.
Yeah.
If it's pessimistic, on the other hand, then you have to make a decision on, is the only way forward is up. Can it only grow? The distressed assets that we purchased over in Massachusetts. If it grows, the only way is up, right?
And we're forcing the value to go higher because we're bringing literally, in that situation, it's real estate. We're bringing the tenant to force the value to go higher. If it sat there by itself, so like that goes back to the team, right? So if we're talking tech, the same thing applies to any type of actual investing. And this is why I don't like coins, the cryptocurrency, because you can't do anything. I can't do anything. If I go and buy a bunch of Bitcoin, what am I going to do to influence Bitcoin? Nothing. I'm going to sit here drinking Scotch and worrying about it. But instead, I'd rather drink Scotch and not worry about it and invest in things that I can, Brian, okay, I can make a call to someone that I know and say, hey, there's this thing that I did. Like, all right, for example, so we invested in a tech, an education technology. I'm actually going to say it. Can I say it? They're not going to sue us. We're investors of theirs. Right?
Yeah, we're not. It's not like we're saying anything bad about it.
Okay. All right, good. I love the company and I'll rep them all day long, even if they don't sponsor us. Midas Education. So we invested in Midas Education. Great company. They have contracts. They're already an established company. It's a Series A, an expansion round. And one of the first things that I did was I made a call because I happened to know somebody in the Santa Ana Unified School District. And I said, hey, it's not like some underhanded weird thing. I just said, hey, check this out. Go check this out and see what you think. And they did. And guess what? They bought it. And now there's an extra contract. I personally, without having to rely on anybody else, even though obviously you both helped and a bunch of other people are part of our team that helped, but like I personally can make a call and make value happen for this company. That's good. And the fact that they didn't screw it up and the fact that they made that sale, right, shows that they're competent aside from their previous achievements. So like, those are the types of things that I want to be able to have some form of value add that I can bring to the table. Otherwise, what the hell good am I, right?
Yeah, it's like we always try to invest in things that we feel like we not only see value in, but can add value to, just through network. I mean, it's like it's all about who gets to the finish line first and in the best condition. It's like so anything you can do to help that, that's just risk mitigation. It's like, because every investment's risk. It's like, but when you can actually add value yourself, that's a form of mitigating that risk.
Yeah,
rather totally. Just hoping.
Yeah, and in fact, I'm gonna call Megan, the CEO of that company, later today, and we have guys in Las Vegas, and see if there's anything that our Vegas people can do to help them, with stuff there. Like the more people that you have, your friends, your workers, whatever it is, however big your infrastructure is, the more you can help these companies. But look, I don't invest in food and beverage stuff. I don't understand food and beverage stuff. I don't know if people want to eat quesadillas today and they want to eat salads tomorrow. I'm like, hell, I don't even know what I want to eat tonight.
They eat a chimichanga that small.
Yeah, and I'm like, oh, do people not eat chimichangas anymore? Chimichangas? Like, I don't know. And there's no way that I can help. Now, I understand how that game is played. You go and get whatever. Who are the popular? The Justin Biebers? The Biebers? Is the Biebs still cool? Do people like the Biebs? I don't know. I'm not a popular guy. I'm not a pop culture guy, right? So whatever. You get the Biebs to be like, I only drink this scotch so that you know. And then everyone's like, oh man, the Biebs drinks that scotch. I want to drink that scotch. Or you have, Dimitri come out and go, let me tell you something about egg shakers. I only use these egg shakers. These egg shakers are the best. And then people are like, oh man, I like that guy and I like his egg shakers. But it's like, it's optics. But optics are ever so fleeting.
Yeah.
Whereas,
I mean, look at the Snapchat. Look at what happened to Snapchat recently.
What happened to Snapchat?
When Kylie Jenner said that, does anybody use Snapchat anymore? And then their stock plummeted a few billion.
I never used Snapchat, so I'm like, I don't know.
Oh, brutal.
Jeez, exactly. So now if Kylie Jenner came out and said, oh, sorry, I was on Ambien and actually I use Snapchat all the time, then, it could go back up possibly. Who knows? Or maybe it's a fatal blow. Like,
maybe that was her play the whole time.
Yeah, she's buying it up.
How much do you want to pay me to put haha JK? Haha JK.
JK in a snap.
Haha JK.
She snaps it out. I don't even know how Snapchat works. I'm like, do you snap? Is it snapping?
Who
Snap. How many snaps does it take to get to the chewy center of a chat?
Exactly.
So that's the whole thing. You can influence in what way? You're either influencing and then you're hoping that someone else doesn't influence negatively, or you're influencing by your existing relationships. I don't know Kylie Jenner personally, and maybe one day I will, when she endorses the Scotch Money podcast.
Yeah, if I was a celebrity and I had
Kylie.
optics on me all the time, I would definitely capitalize on that just by researching everything I want to use in my life. So
I think I don't want to be a celebrity.
Look where the fabric comes from, make sure it's all responsibly done and produced. And then that's the clothing I would wear. That's who I would represent. That's who I would promote. Same way with vehicles. Stop vehicles. Determine where they're coming from, how they're being made, what their business practices are. Do they have a good future? Are they going to support this? And once you do all that research, it's like, okay, now I'll endorse you as well. And it's like, then basically everything you would want to use in your life, you would get for free. And at the same time, you could stand behind and push it all to the finish line.
Of course. And that's exactly what, I mean, not to be giving out Kylie's tricks before she even came on the show, but that's exactly what Kylie Jenner does and whatever, the Kardashians, that's what they do. They literally, they don't give a crap, man. Nobody gives a crap. Consumer goods are consumer goods. You only give as much of a crap as you do in the moment because you're getting paid. Now we're going to totally get sued. Do it. Make my day. No. But technologies that go to the public sector are slightly different. They're still the same kind of, optics is optics, but it's different in the sense that I can eat a Chewy bar or whatever, a granola bar made by Chewy, and be like, that's a great bar, and then be done with it. But with technologies that are, or I can wear a piece of clothing and then tomorrow be like, you know what? I'm not a huge fan of this shirt, so, it wrinkles in particular ways. I'm going to go to a different shirt. But when you make a buying decision on a technology, you're usually doing so on several year contracts. So you kind of have to live with it. So it's a different decision, but once you're in, you're in. You see what I'm saying? See what I'm saying, Kylie? You listening to me? You listening to your old pal Dimitri? It's a different thing. Does anybody have any other thoughts? I mean, like, we could talk about tech all day. We love tech, but
That's why it's important to know your sector and your stage. Like,
yeah,
I mean, that back to that. If I could sum up, getting involved in tech investing or what to focus on in the tech investing world, get to know your technology, and then pick your sector and your stage where you feel the most comfortable. Risk wise will determine your stage, and then
and
what
define it.
that turns you on and you like and you understand will determine your sector.
Yeah,
These two meet. That's where you want to play.
That's right.
And at the end of the day, tech isn't, from an investing standpoint, tech isn't even about the tech. It's about who the tech can reach and who the tech connects. And you can't just understand the tech, you have to understand those other aspects as well. It's very social and it's very squishy.
Gotta have the money.
And that part of it is
You gotta have that sweet, sweet money. The sweet, sweet Scotch money
around the tech. Yeah.
Mm.
Big time. And
Gotta.
then this last, that's before you pull the trigger. It's like now you've got your bullseye set, and your target on it, But once the crosshairs are there, don't pull the trigger until you've really done your due diligence on the team, because team can make or break. I mean, you have the greatest idea and a team can kill it.
Totally. And sometimes you got to switch up the team. Like if you're a savvy enough investor, you're investing in things that you have other relationships in that industry, so that you can, if a CFO backs out or a CFO is not getting the job done, you can say, well, I recommend you take a look at this CFO, or even a CEO. Sometimes you switch that up. And the CEO the existing CEO has to know if it's time for them to step down or to change it up. Like, that's part of understanding the team. Guys, I feel like we've really done a great job educating people.
That the company allows for that as well.
Yeah,
exactly. Documents of the startup will allow for that kind of flexibility and change. Sometimes there's one person that if they have a bad attitude they can just tank the whole thing.
Yeah.
Just based on the structure. They have enough controlling, Yeah, definitely check the structure.
You know what people were saying before they heard this podcast, to all of our many, many, many fans? They were saying, I want to know what tech is. Want you to show me. I want to feel what investing tech is.
Well, that's the thing. It's what's cool about tech. There's tech in almost every walk of life, so to speak, just like what you were saying earlier. There's food tech, there's financial tech, even cannabis tech is becoming, part of the cannabis ecosystem that's forming around.
Wait, Brian, what's the cutting edge? What's that sweet new technology that they're using to grow now? Soil. Instead of hydroponics, they're using soil. Oh my God, what is happening here?
Ionized, charged soil, though.
Well, yeah.
That's what makes it the new.
We've gone full circle. So sometimes, you got to follow the KISS method. You guys know the KISS method, right?
Keep it simple, stupid.
That's right. We're on the same wavelength. Gentlemen, Scotch money. We love it. We do it. We drink it. We invest in it. Thank you, everybody, for listening to this episode. This is episode 7? It's episode 7 of Scotch Money, where we invest in Scotch and money and investing and money and Scotch.
Just edit that to make sense, Brian. Edit that to make
follow us.
Just pick the word, put them in the right order.
Smash that subscribe button. Follow the like button. What else? Do the hearts on the Twitter and the retweet. And I want someone to tweet this at Kylie Jenner. And I want Kylie Jenner to join us on the show if she wants. And join us on next week's Scotch Money Show.